Excellent. So today's Insurance 101 webinar forms part of the programme for Small Charity Week 2022, which launched yesterday. So Small Charity Week, now in its 13th year, sees a whole week of activities and initiatives to support and raise awareness of the hundreds and thousands of small charities that every day make a huge difference to vulnerable communities right across the UK and the rest of the world. Today's Insurance 101 webinar, in partnership with Zurich Insurance, is part of NCVO's contribution toward the week. And over the next hour, we'll aim to provide you with all you need to know about charity insurance, giving you the chance to put your questions to our insurance expert from Zurich, Steve Gettings. As we go along today, please feel free to add any questions that you have into the chat. I'll collate these questions together for a Q&A towards the end of the hour. But before we dive into the content, there are just a couple of housekeeping points that I wanted to note. So you'll have noticed that closed captions or subtitles have been enabled, and you can turn these on or off by clicking on the CC icon on the toolbar at the bottom of the screen. My colleague Chanel, who is producing today's session, is going to post a copy of the slides into the chat box too. So if you'd benefit from having these slides open on a separate screen where you can zoom in or zoom out on the content, you can download this PDF onto your computers. There won't be a formal break during the webinar, but if you need to step away for any reason, please feel free to do so. Everyone today has joined us online in view-only mode, so you don't need to worry about your mics or your cameras, as these are all turned off automatically. And just a reminder again, any questions that you've got as we go along today, please add these to the chat box. So from our perspective, we're not anticipating any fire alarms, but obviously please keep an ear out for them wherever you are. And finally, a copy of the slides will be circulated via email shortly after today's event with links to all the things that we reference. So without any further delay, and to begin our Insurance 101 webinar, I'm pleased to now hand you over to our expert from Zurich, Steve Gettings.
Thank you, Nick. So as Nick said, my name is Steve Gettings. I am Head of Sales for Zurich's Chichester office. In the Chichester office, we deal with small and medium-sized charities with an annual income of up to £5 million. So what I would encourage you to do today is ask questions in the chat. And what I will say is I'm very aware that there's going to be various different levels of knowledge for those of you that are attending today. There's no question too basic or too complicated. I'll do my best to answer any questions that you have. Anything that I'm not able to answer, whether I need to go away and find that out for you, I'm more than happy to take that away. So please do ask questions as you go, and I will do my very best towards the end to answer them for you. So what are we going to cover today? So a few things. The first is, how does insurance help protect a charity and its trustees? What lines of cover should you consider? So that is a really common question that us as an insurance company get. So what lines of cover do we need? Are there any legal obligations? What do you need to consider before buying insurance? We'll go through a few key points there. Risk assessments. Now, this is a subject that we discuss quite a lot with our customers, so we'll touch lightly on them, what your insurer expects and what you need to do. And as previously mentioned, we'll do a Q&A at the end, where Nick will field your questions to me and I'll do my best to answer them. So how does insurance help protect a charity and its trustees? So trustees have a duty to protect their charity's assets and resources, and buying insurance is one of the ways that you can carry out this duty. Now, the Charity Commission provide guidance on charity insurance, and I think Chanel's going to pop a link into the chat now. Now, it's worth you guys referencing that when it comes to insurance, as it contains some very interesting and relevant information that I might not cover off today. So definitely worth opening that and following along. So the nature of the protection provided will depend on the type of insurance that you purchase. So each charity is different and wants to insure against risks of a different nature. So there's various different things that you might want to consider when buying insurance, and that will completely depend on the services and activities that you provide. But some of the common risks that we see that you might want to consider protecting against are damage to property. So if you guys own buildings or contents, and that will be very similar to the personal insurance that you have for your home insurance. Interacting with members of the public. Now, you definitely want to potentially consider insurance there if you're running events, have members of the public coming onto your premises, etc., etc. Holding public events, again, very much a exposure to members of the public. Interruption to your activities, loss of income. So that will be related to business interruption, which we'll come on to very shortly. Having volunteers, so I'll talk a little bit about how you can protect volunteers and how different insurers may approach things differently. Trustees' personal assets. We'll talk a little bit about trustee indemnity and how you can protect those. So are there any legal obligations? So yes, there are. There's only a couple when it comes to charity insurance. The first is employer's liability. So if you have paid employees, you will be required by law to have employer's liability to a minimum level of £5 million. Now, the majority of insurers that you speak to will probably offer 10 million as standard, but the legal requirement is 5. Now, put simply, that protects your organisation should there be a claim from a member of your workforce if they suffered an injury whilst at work and they believe that was down to your negligence. So it all comes down to negligence. So if someone slipped off a ladder, for example, and was given equipment that was proved to be faulty or hadn't been inspected, then they may seek to claim against your organisation for their injuries. If that does happen, that's when employer's liability will come in. And one I'm sure you're all very familiar with is motor insurance. So just like you will do in your personal capacity, if the charity owns or leases any motor vehicles, you'll be required to take out third-party fire and theft at a minimum to cover that risk. So what lines of cover should you consider outside of the legal requirements? So the Charity Commission state that insurance cover should only be taken out if the level of risk which is to be passed to the insurer makes the insurance premium worth spending, and that's unless it is required by law to take the cover out. So what that means is that what you don't want to do, if the potential loss to your charity is lower than the insurer will pay out in the event of a claim or what you pay in insurance premiums, then it's probably not worth considering. So a good example of that is insuring a contents item which might be worth £50, but the excess on the policy is £100. They would have no value to you to insure that. So that is one example where that applies. But what I'll do is I'm going to go through all of these lines of cover. These are the common lines of cover that our customers take out and that we have questions on as well. So public liability is without a doubt the main line of cover that our 16,000 charity customers have. This covers you in the event that you cause bodily injury or damage to third-party property. Put simply, so if you have, as a result of a negligent act, caused someone to be injured or damage their property and there's a claim made against your charity for that incident, the public liability insurance will provide cover and costs if there's any legal costs involved with that as well for claims made against the charity. And whilst I'm on public liability, I'll talk a little bit about how different insurers may have a different approach to insuring volunteers. So on the Zurich policy, we provide cover for volunteers under public liability. So unless you have paid staff with us, you won't have a requirement to take out employer's liability. However, that is not necessarily common across the whole of the insurance industry. So if you are speaking to a different insurer and they say that you need to take out employer's liability to cover your volunteers, that will be because their policy is slightly different and they will class volunteers as employees under their policy wording. So although employer's liability is only a legal requirement, if you have paid staff, you can also take it out depending on the insurer for volunteers as well. So always worth checking with your insurer to understand where the volunteer cover is on your policy. Another thing worth noting is that generally public liability will follow your organisation around the UK. So whether you're doing trips out or trips to the theatre or events held in public that are outside of your usual premises, the public liability should and always check with your current insurer to confirm this, but it should follow you around and provide cover for your activities whether it's inside or outside your premises. Now, trustee indemnity is a line of cover that, again, we get a lot of questions on. There's quite a few common misconceptions within the sector about trustee indemnity and what it covers. So what does it cover? Well, it provides protection to trustees' personal assets if a claim was to be made against the charity for an act, an error or an omission on their behalf, which results in a financial loss. Now, that at a headline level might not make too much sense, or it might sound a little bit complicated. And the honest answer is that it is a little bit complicated as a line of cover, and it's actually really difficult to provide specific examples of where a claim may or may not arise. One example that we do use quite commonly is if you were a charity of a sports club and you had commissioned a contractor to do some work on the roof of the sports pavilion, and you had done that on the basis that you were of the understanding that you were going to receive funding. Now, if that funding then fell through and you were unable to pay that contractor, the contractor may make a claim against the charity or the trustee for that decision to hire his services without funds being in place. In that case, the trustee indemnity would kick in and provide cover for the charity to then pay that contractor. So that's one example of how it can happen. What it doesn't provide protection for is fraud, essentially. So if trustees act purposely fraudulently, it will not cover that. It is for accidental errors or omissions. And what it also doesn't provide cover for is bodily injury. So it's quite a common misconception that you need trustee indemnity to cover bodily injury for members of the public. So if the trustees do something which causes injury to them, that would be picked up by the public liability insurance, certainly with our policy. Again, I will stress throughout this, a lot of the time I will reference the Zurich policy, but it is worth double checking with your insurer if you are insured with someone else to make sure that's the case. But in that case, the public liability would actually, as a general rule, pick up claims made against the charity for that. Material damage, now, I'm sure you're all fairly familiar with this and what it covers. It is accidental damage, flood, fire, etc., those sorts of things against your buildings and your contents. I don't think I need to go too much into that. It's fairly self-explanatory, and I'm sure that you're all familiar with that from insuring your own property. But if there are any questions on that, pop them in the chat and I'll be more than happy to answer them for you. Money cover. So money cover is typically taken out for organisations that handle cash, put simply. So whether that's running a public event where you are collecting funds and need to take them to the bank after the event, that's the most common one, or whether you're a village hall and you collect money from your hirers, and then again need to take it to the bank at the end of the day, it covers that. So, and not only does it cover money in transit, but it also covers money in the safe on your premises, or the safe on or someone's personal property. So if the trustee takes money home, for example, there can be small limits for that. Okay, so business interruption. Again, this is one we get quite a lot of questions about, especially since COVID. So business interruption provides financial compensation for additional expenses. So additional expenses is where if you've had a claim against your building. So what's quite important to note is generally there has to be a claim on your building's insurance for business interruption to come into play. So for example, if there was a fire in your building and you weren't able to operate anymore, you might want to cover the additional expenses of operating from a different premises. So there would be a payment to your charity, which would then allow you to move premises whilst your main premises was being fixed. Another element of business interruption is loss of revenue or rent. So obviously if your building was to go up in flames, you wouldn't have revenue coming in from your normal streams, whether that be through hiring it out, or any other means that you might have. So it would provide payments for the loss of revenue or rent following damage to the building. Now, there was quite a high-profile court case after COVID, where some insurers had not paid out for a thing called communicable diseases due to COVID. Now, different insurers obviously had different terms within their policy, but the general consensus was that coronavirus was not covered under business interruption. So again, if that's something you're concerned about, definitely worth checking with your existing insurer to see what their stance is on communicable diseases and business interruption, just so if we were to go through a similar situation as we did a couple of years ago, you know where you stand on that. Legal expenses. So legal expenses is typically taken out for things like employment disputes. So if your charity were to consider redundancies, for example, the cover is provided by a third party. Generally, it's DAS or DAS you may come across. There's one other as well, main legal expenses insurers, which provide this cover, and they provide legal advice on all things related to employment practices. That's the main element of the cover. Now, there are some add-ons such as contract disputes and loss of license. Again, if you're not sure what your current legal expenses cover holds, or whether you have it at all, speak to your insurer, see whether it's something that would be relevant to you. But it's certainly, if you're a reasonably sized charity with quite a big workforce and you do occasionally have to go through the process of redundancies, etc., certainly worth considering. High risk liability. So high risk liability is a line of cover that will be commonly taken out by organisations that, as the name suggests, hire out their premises. So what it does is essentially provides an extension to your cover, which provides public liability to those individuals or organisations that hire your premises. So a really good example of that is a village hall might hire out their premises to things like children's birthday parties or weddings. Now, you wouldn't necessarily expect weddings or children's birthday parties to come with their own public liability insurance. So what it does is extend your cover to include cover for their activities. So if there's an incident during the wedding or birthday party which results in damage to your property, you then don't actively have to pursue the hirer. You can just make a claim on your own policy. And that can be a benefit as well, because it can encourage people to hire out your premises knowing they're insured and they don't need to take their own insurance cover. Now, generally, this shouldn't be used as a replacement for public liability. So if you're hiring out premises to organisations and bona fide charities, they should have their own public liability generally. It shouldn't be an extension or replacement for having their own public liability. It is designed for sort of those informal groups or informal individuals that may hire your premises. Professional indemnity and professional negligence. Again, this is a line of cover that can be quite complicated, and a lot of our customer base doesn't necessarily understand it. And a lot of our customer base are commonly asked to have this, generally if they're bidding for funding through the local council. You might have seen forms where you have to tick to confirm you have X, Y, and Z insurance. And quite often professional indemnity is one of those lines of cover that you may have been asked to get. And you might think, well, why do we need it? And quite often we have to have conversations with our customers that they might not necessarily need it. So in terms of the Zurich policy, our professional indemnity provides cover to organisations that offer advice where generally a fee is charged. So a good example of that is a charity that may fill out forms, for example, so benefit forms for individuals, and they charge a fee for that service, or it might be payroll services. And it generally has to be a professional service, where a fee is charged, where the service user could suffer a financial loss due to misadvising that person. Now, for the vast majority of small charities, that's not a service that you will offer. There will be some of you that do offer that sort of service. But again, speak with your insurer, see if it's something that would be relevant to your charity or not. because again, it's quite a common thing that we get asked to quote for, and we have conversations. Why do you think you need it? People often don't really know why they need it. They've just been asked to get it. So in a nutshell, that's what it covers. So yeah, double check with your insurer, speak to us if you're one of our customers, and we can guide you through whether that will be something that you might want to consider or not. Libel and slander. So this is something that's been in the news very recently with the Johnny Depp and Amber Heard case. So libel and slander, put simply, covers either libel or slander. So if your charity either libels, which is the written word, or slanders, the spoken word, a third party, and that third party claims to have suffered a loss due to that libel or slander and make a claim against your charity, the insurance will cover the costs of those claims. So in a nutshell, that's it. And like I said, that's something that's come up fairly recently with the Amber Heard trial, because Johnny Depp made a claim against her for libel and slander. And we all know the result of that one, of course. Fidelity guarantee or crime cover. So this line of cover provides protection if, in the event, either a volunteer or member of staff of your charity steals from the organisation, essentially. So it's a dishonest or fraudulent act by employee or volunteer. If that does happen, there is cover available for that. Business travel, again, this is a line of cover that you'll be fairly familiar with in your personal lives. I'm sure if you go on holiday, you'll take out your travel insurance, and essentially it is a very similar thing. So it covers the cost of cancellation, it covers, you know, loss of luggage, baggage, etc. There's also an element of things like kidnap cover. So if you're going to countries where there is a potential risk of that, it can include cover again for that. Now, it's again worth checking with your insurer on the full terms of that, because each policy will be different, will have different limitations depending on where you're traveling to, etc. Okay, so that's sort of the main lines of cover that we get questions about and what we're asked about. So I'm going to talk a little bit about what do you need to consider before buying insurance. The first is to understand the detail of how your organisation operates. Sounds fairly obvious, you might think, and straightforward. Of course, I need to know that. But you'll be surprised the amount of charities that we speak to. We have certain questions that we ask them and then just not sure. So again, every insurer will be different. They'll ask different things. But before you speak to an insurer, before you get a quote, you want to have a really good understanding of the services and activities that you provide, how often they take place. You'll also need to know figures like your annual wage roll and your staff and volunteer full-time equivalent. Now, if you work closely with children or adults at risk, you're likely to have questions or likely to be asked to fill out forms around your safeguarding procedures. Safeguarding is a particularly hot topic amongst insurers. You know, claims can arise from several years back, so insurers really want to make sure those with exposure are on top of their safeguarding risk. Another common question we get asked is, are different types of voluntary organisations treated differently? Again, it's going to depend on who you're insured with. From a Zurich perspective, no. As long as you're a not-for-profit organisation, our products are available to you. And whether you're a registered charity, unincorporated, or a community interest company, the policy terms will remain the same and it has no impact. Now, I think another thing worth pointing you guys to at this stage is to always check with your governing document to see whether there are any specific requirements on insurance on there, because there may well be. And another thing to mention is it's around Charity Commission guidance. So the Charity Commission states if a charity is a member of a national organisation, it should contact the national headquarters for advice on insurance, as many national organisations and umbrella bodies have negotiated group schemes. So I think that's worth mentioning. If you are part of a national body or umbrella group, it's certainly worth contacting the main body to see whether there are any insurance benefits tied in with that membership. Another thing that you need to consider before buying insurance is ensuring that you have accurate sums insured for your buildings, especially, but also contents. So buildings and contents are typically insured on a new for old basis. So what that means is you will need to declare an amount to your insurer of the rebuild value of your property, i.e. if there were to be a total loss and your building were to burn to the ground, the cost of rebuilding that back to its former glory in a new state. And that will include things like cleanup costs, labour costs, etc., etc. Now we're having lots of conversations with customers at the moment where we have concerns that the rebuild values that they're declaring might not be entirely enough or accurate. Now, why is that a problem? Well, it's a problem because in insurance policies, there's a thing called the clause of average. Now, what that means is that if you underinsure your building, your insurer has the right to underpay any valid claim by the percentage that you've underinsured. So a working example of that is if you insure a building for £1 million and the insurer insists that the true rebuild value is 2 million, then the extent of the insurer's liability, i.e. the payout, is limited to 50% of an insurable loss. So the insurer would only technically have to pay out £500,000 of that claim. Now, whether that happens in reality is an entirely different thing. You might get an insurance company that are quite generous and will pay you the full amount of the claim, but it's always worth bearing in mind that they do reserve the right to do that. Now more than ever, with increased cost of living, cost of materials, cost of labour, it's really important that you understand that if you do have a building, that sums insured with your insurance policy is accurate and up to date to avoid that average clause happening in the event of a claim. Because as a charity, that would be the last thing you want. You know, your building burns down, for example, and then you find out you've incorrectly insured it or inaccurately insured it. The general guidance is, if you're not sure, get a survey done by a professional surveyor and do that at least once every 5 years to ensure that you're comfortable that it's up to date and accurate. Now, another thing that you may speak to insurance companies about is risk assessments. Now, I know there's lots of really interesting and good resources out there, including the Charity Commission. Charity Commission, the government website, have really good resources on risk management, certainly worth referencing those. What I'll do is talk a little bit about Zurich's view on it and how we approach it. So what is risk management? So put simply, it's about identifying and managing risks that could impact your organisation or charity. So that might include reputational risk, risk of injury to service users or volunteers, risk of damage to your property, sustainability. It could be a whole world of things, and that would depend on the services and activities that you provide. But mainly it's going to be around health and safety. So health and safety with your volunteers, employees and service users in mind. So how do you do a risk assessment, or what should it include? So here's a really simple 4-step process that we generally advise or guide customers on. Number 1 is to identify all the activities that you undertake. Number 2 is to assess, so whether any of those activities could result in someone being injured and how serious could that injury be. Then once you've identified that, prioritise. So what's the riskiest thing that we do essentially? Prioritise those in order, and then 4, decide. So we've assessed whether there's any risk of injury. We've prioritised how serious or not that might be, and then decide, so what steps do we need to take or not to ensure that we minimise the risk of an incident occurring. It is really that simple. Now, it might be that your risk assessments, when you write them down on paper, are actually quite small and not in detail. And certainly from Zurich's point of view, we generally don't advise you on what it should include in terms of a risk assessment. We just guide that it should incorporate everything that you do, and then state whether you've taken any further action on your services and activities. And then we leave that ultimately for you to decide and keep on record as well. So I've got here a few useful resources. So there's one here for news and insight from the Zurich website, and there's some really interesting free risk management content there. there's an article on public liability insurance and why charities might want to consider it. And also within that link, there will be some articles on other lines of cover as well, some frequently asked questions. We also have a video series with lots of FAQs on things like trustee indemnity, which goes into a lot more detail than I've discussed today. And then there's also a health and safety executive risk assessment template there, which we found to be very, very useful to provide to our customers as well. So that pretty much goes through my slides. And Nick, I think we're going to pass to you for the Q&A section.
Awesome. Thank you so much. Who knew that there were so many different types of insurance cover that you can and potentially be thinking about taking out? So thank you for providing such a comprehensive overview of all of that, kind of Steve. Just as a reminder as well, we will be circulating a copy of Steve's slides today, which have also been posted to the chat, but we'll send them via email shortly after today's event. And Chanel's also been posting lots of links to different things that Steve's been referencing. We'll also include all of those links in the email, so don't worry if you haven't had a chance to click them and open them on your browsers. But Steve, we have got almost 20 questions that have come through in the last 20 or 25 minutes. So let's jump straight in. So the first question, we are a national hosting scheme. Can you tell me what do hosts have to tell insurers legally about their temporary guests? And why do some insurers charge more depending on the guest's nationality? Also, some insurers cover guest incidents and some don't.
Okay, so I'm assuming that, thanks for your question, by the way, I'm assuming that by hosting organisation, you have properties, which you then essentially temporarily hire out to people that might be travelling from different parts of the world and living with you or on your premises. And Nick, sorry, could you just take out the two key points that they asked for at the start there? Sorry, I've slipped my mind.
So can you tell me, do hosts have to tell insurers legally about their temporary guests? So perhaps these are also about kind of families who maybe kind of bringing in hosts or kind of refugees on a temporary basis. And why do some insurers charge more depending on the guests' nationalities?
Sure. So do you have to tell your insurer about the guest? Now that will entirely depend on the insurer. But what I will say is that as a general rule in the industry, you should always inform your insurer of any material fact which you believe may have an impact on the policy or the insurer's view of the risk. So if you think you're doing something inherently more risky than you've declared to them previously, then you should notify them. If it's business as usual and the insurer's understanding of you is that you take in different people throughout the year and they have a rough idea on the number of people that you take in, I would say probably not, but I would double check to make sure. Now, in terms of why do some insurers charge different for different nationalities, I've not actually had any direct experience of that being the case, so that's really difficult to comment on. It certainly shouldn't have an impact on the insurance premiums, the nationality of your service users. That's a slight surprise to me. So I would certainly be questioning that with my insurer if it were me. So I'd certainly have a conversation with them about both points on your question.
Great, thank you. So the next kind of question is around kind of public liability. So what determines what level of cover that you need? For example, 5 million or 10 million or potentially more?
Yeah, great question. So there is no right or wrong answer to that. So I mean, you could even go as low as 2 million. Some insurers do that. I mean, Zurich do 5 million as a minimum, and a lot of council requirements. So if you have a contract from the council for an event or something like that, quite often they'll ask for £10 million. And there's no right or wrong answer. It's all about using your judgment. Now, what you will do is pay slightly more for your insurance premiums if you have a slightly higher limit. But what you need to take into account is what could happen that could result in a claim. So what's the worst case scenario? Are you hosting an event that has 5,000 people and could they all be injured at the same time? If the answer to that is yes, you want to towards a higher limit of indemnity. If you're just quite a small informal group, a coffee club, something like that, for example, that meet once a week, you're probably not going to want to consider 10 million. So it all depends on your situation. But I would say there's no right or wrong. Go with what you feel the max exposure is that you could have.
Great. And so that's definitely a conversation for people to have back with their leadership teams or maybe with their board of trustees around that.
Certainly, yeah.
So we've got another kind of question. So does trustee indemnity cover directors?
Yes, it does. Yeah. So certainly from a Zurich policy, we have a definition of trustee in our policy wording, and it includes committee members, trustees, non-paid directors, etc., etc. So that's from a Zurich point of view. Again, as I've stressed throughout this, do check the terms with your insurance company. But as a general rule, yes, it does.
Great. And then this next question, you might have addressed this in your slide about whether different types of voluntary organisations are treated differently. But does legal structure of a charity impact the need for trustee liability? Example between like registered charities, charitable companies, CIOs, CICs?
So the answer to that is it doesn't really. I mean, the structure of your charity, regardless of that, you still have a potential trustee indemnity exposure. One of the common misconceptions, now forgive me, I can't remember which charitable status it is, but I believe one of them limits the trustee's liability to £1 if the charity ends up being wound up. Now, if that's you, that doesn't necessarily mean that the trustees can't be held liable for an error or omission that causes a financial loss to a third party, for example. So again, if you're unsure, and especially if you have an insurance broker and you want some advice around whether you need it or not based on your structure, do seek to get some form of legal advice on that. Your insurer isn't always the best person to go to those sorts of questions on. If it's around legal structure, do speak to your legal counsel if you have that.
Great. And then another kind of technical question about the different makeup of different types of groups. So how much of the kind of cover that you've been spoken about today is that also kind of accessible and relevant to constituted community groups?
Absolutely, yeah. So we deal with all not-for-profits at Zurich. So whether you're generally from a Zurich point of view, our only requirement is that you are a constituted group and you have 3 or more people in your committee. If you can tick those 2 boxes and you're not for profit, generally our policies are suitable.
Perfect. Sorry, these are kind of really kind of fast questions that you see there. So forgive me.
Keep going. That's absolutely fine.
So going on to business interruption. Would this potentially cover if someone leasing part of your building broke their lease and stopped paying rent?
The answer to that is no. So business interruption, it has to be linked to some event which is linked to the building, if that makes sense. So as a general rule, business interruption comes into play if there is damage to your building and you're unable to operate from that building. I'm just trying to rack my brains to see if there is any cover if a tenant stops paying rent. Possibly, I can't think of one off the top of my head, so I'm sorry, I'm going to have to pass on that question. But it's possible, I would imagine.
Okay, thank you very much. So we've kind of got 2 questions around legal expenses. So does legal expenses cover other legal situations except for employment? And do legal expenses cover things related to volunteers, or is it solely around employees?
So generally it is around employees. Sorry, could you repeat the first part of that question, Nick?
Yeah, so does legal expenses cover other legal situations except for employment?
It does, yeah. So legal expenses does have several different elements to it. I won't go through them now. It's not just legal practices, that's the main element of it. Now, as I said during the presentation, there's generally either 1 or 2 in the country insurers of legal expenses. So us at Zurich and your insurer is likely to outsource that cover to those 2 organisations. So I'd recommend doing a bit of research on what it includes and whether that's something you want to consider.
So I think we've just had a follow-up in the chat. So I think the other kind of legal situations, could that include neighbour disputes?
Neighbour disputes, unlikely. Generally, you can add contract disputes. So if you are unable to fulfil a contract, for example, neighbour disputes, unlikely. I'm not aware of any product, certainly the Zurich offer, that would provide any cover for that. But again, it depends on what that dispute is and whether that results in any kind of loss to the charity or loss to the neighbour. So at headline level, probably not, but it depends on the detail and whether there's been any loss suffered on either side.
So that would probably be worth a conversation with the insurers that you've got in place.
Yeah, certainly.
Great. And then a couple of questions around professional indemnity insurance. Would that cover consultancy work that may involve HR issues?
Potentially, yes. HR and payroll is one of the things that can be included within professional indemnity. Again, if you're not sure or want to confirm whether your situation could be covered under that line of cover, speak to your insurer, because every insurer will have different terms.
Right. And how often would you recommend that charities review their insurance company?
I'd recommend that you do it every year. I say this to all of our existing customers when I speak to them. I'm quite often shocked being in the sales team and working with new business customers at the premium some of the charities are paying for their insurance, because they have renewed year on year for the last 5 to 10 years without testing the market. I'd recommend that you do it every year to know that you're getting the best product, the best price. It's certainly what I'd recommend doing.
Great. And then we've got a question around when reviewing policies, which lots of charities do review on an annual basis. What are the key things that they should be reviewing in terms of insurance?
I think probably just ensuring that you're comfortable, that you understand what your insurance covers, and that you've considered what risks that you face as a charity and whether you're appropriately covering them as a general rule. Just ensure that you're confident that that is the case. That's what I would say to that.
Excellent. So I've just lost my place. Where are we? Oh, one on libel and slander. So does libel and slander cover an employee slandering the charity?
No, it doesn't. So libel and slander is protection for claims made by third parties against the charity for something they have said or written. So I think generally the important thing to remember with insurance, not always, but certainly the lines of cover that I discussed today in the main, they're mainly protecting where a third party would seek to claim against you as a charity for an action or something that you've done which has resulted in a claim. So certainly libel and slander, no, it wouldn't provide cover for that.
And with kind of libel and slander, does that also kind of cover things that kind of volunteers may say that a third party may kind of take action against your organisation for?
So again, I would check the terms in your specific policy if you do have it. With the Zurich policy, it has to be comments or words that have been written or spoken by either an employee or a member of the board, essentially, or approved by a member of the board if it's written. So just check the terms of your policy on that.
Okay. And if volunteers use their own cars, for example, to deliver books to vulnerable clients or giving people a lift, what insurance is necessary for the organisation or the car owner?
So there's two options here. Either the car owner can contact their insurer personally to extend their cover to include business use, or there is a line of cover available that the charity can take out themselves to cover their workforce for using their own personal vehicles. It's called occasional business use is the line of cover generally. So there's two options there. The most common one though, and probably the easiest one if you are a small charity, is just that the individual extends their existing policy to include it.
Great. We are jumping around to different topics here, so thank
That's
you
fine.
for
That's
all these. If we don't specifically work with adults at risk, but some of our service users could be adults at risk, do we have to disclose this to our insurers?
So the way that we approach it at Zurich is that we understand that some organisations may have incidental contact with either children or adults at risk without planning to or deliberately doing that. Now, we wouldn't necessarily expect you to have squeaky clean safeguarding policies, DBS checks, etc., if you're not intending to deliver services to adults at risk or children. But again, speak to your insurer, make sure they're happy with that. Certainly from Zurich's point of view, we understand that might happen. So as long as you're not telling your insurer that you're never going to work with children or adults at risk, but then you're intentionally delivering a service which you know will include children or adults at risk, it shouldn't be a problem.
Great. We've got a real practical question here. So what insurance certificates should we be displaying in our reception area?
So you're now, I believe, now I'm not a legal expert by any means, so my understanding is that you don't actually have to display employers' liability certificates anymore. I think you just need to retain them, I think. Now, don't quote me on that. It's worth double checking if you're not sure. But employers' liability certificates certainly you have to retain and produce on request. And also my understanding is that there isn't anything else in the way of certificates that you need to display. So there's no sort of legal requirement to display a public liability certificate, for example.
Great. And we've got someone joining us online today who is self-employed as a mentor and coach working part-time, but they've recently started a CIC to also do the same sorts of workshops. Is there an insurance from Zurich that can cover this under the same umbrella without getting two separate insurance premiums?
From Zurich, no. I think you're likely to struggle because when you take out a policy in the name of an organisation, so in this case it would be the CIC, it will only cover services that are delivered by the CIC directly. It almost ignores you as an individual outside of that, if that makes sense.
Great. And then obviously over the past 18 months to 2 years, lots of people have been working from home as well as working from the office. So what are the implications of remote working on insurance? And is there anything specific to consider and mention?
Implications, I would imagine, are relatively small. Again, I sound like a broken record, but do check with your insurer because everyone will be different. Now, there may be things that you've declared to your insurer in the past that all of your staff, for example, are office-based and they work from a certain address. It's probably worth just declaring to them that you do have people working from home. I would imagine the response will be absolutely no problem. We'll make a note that you've let us know. There's no impact on the insurance, but thanks for letting us know. You're always better to do that to be safe than sorry, rather than getting any nasty surprises if you do need to make a claim and there's some kind of exclusion, which is probably unlikely, but you never know. If there's any change in your situation, as a general rule, always just notify your insurer to make sure they're aware.
Excellent. This next question, someone is in the process of incorporating an unincorporated charity. Can the new charity indemnify the trustees of the original charity? And if so, how?
I'm going to pass on that question because I think that's probably something you would need to get advice on, whether that be via a broker or your legal counsel. I think that could be very dependent on lots of different factors. So not something that I wish to confirm or not.
Okay. So on to the next question. So we're currently a small charity and it's likely that we'll be acquiring some property. We have yet to find out whether it will be full ownership or leasehold. A lot of work will have to be done on the property. We have basic insurance with Zurich. Oh, and I have not copied all that. We have basic insurance with Zurich. We are concerned that there will be a vast hike in our insurance or it will be a second insurance as a buildings insurance. We were wondering how much the extra will be.
Impossible to say a figure without knowing more on the building, more on the contract works that will happen, etc., etc. So I would be plucking a figure out of midair, unfortunately. But yes, I would expect, if you are a small charity and you just have public liability, for example, and you are going to add on a building that has work doing to it and that needs to be insured, I would expect an increase in your insurance. But speak to us. We'll ask you some information around the value of the building, what works are going to happen, and we should be able to provide a quote for that.
Perfect. Another question. My charity supports people born with a rare disease. We publish 2 books and some leaflets. We also run an information website plus social media forums. This can be seen from anywhere worldwide. Which types of cover might we most need? Okay,
so that's a really good question. So I think one thing that you might want to consider is if you are producing, did they say books in that question?
Books and some leaflets.
Books and leaflets. So,
and they also run an information website and social media forums.
Information website and social media forums. Okay, fine. So, I mean, libel and slander might be one thing. So if you are heavily posting online information, discussion forums, etc., that might be something that you want to consider. Another thing is products liability. So if you are selling things like books, those books, although it is a very small risk, could cause an injury to someone. Very, very unlikely. Generally, products liability is included within public liability. So it essentially is public liability, but if a product that you're responsible for providing causes injury to someone, it provides cover there. Outside of that, I think it would depend on whether you're offering advice on those forums. So if you are offering advice, and especially if you're charging a fee for that advice, certainly worth looking into whether you might want to consider professional indemnity or not. Again, that's going to depend on how you deliver that advice and what the advice is.
Okay, we've got 3 more kind of questions to go, Steve.
No problem.
So almost at the end. Does insurance cover extend to volunteers of an event that is being co-hosted with another organisation, or are both organisations equally responsible?
Yeah, so this is actually something that's quite tricky from an insurance point of view, something we get semi-regularly. It can cause quite a lot of issues if you run an event in a joint way, because if you imagine a claim arises, something happens during the event, it's being jointly organised, who is responsible for what, who do we claim against? It can get quite complicated. At Zurich, generally, we will only take on events where one of those 2 groups will take over as the sole organiser of the event. So there still can be input from the other organisation, and it might be that they provide volunteers as well. But generally, we'll say you really need to have one of those organisations taking the main control and the liability there. It might be that if you speak to a broker and they can give you advice on other products that are out there that can cover policies in joint names, for example, that's a possibility. But it's a really good question because it is quite a complicated subject.
We've got another one around like a new area of kind of insurance maybe, which hasn't been touched upon so far. So someone's asking about kind of cyber liability and cyber insurance. They've got it in place, but they're not sure if it's worth having it. What benefits is there of having the cyber insurance cover?
Yeah, so cyber is something that I'm personally not that clued up on. Zurich don't provide a cyber policy. Now, my understanding is that the main thing that it will provide cover for is ransom fee payments. So if you are hacked essentially and you have personal data or whatever it might be on your systems that person retains and then requests a ransom payment, that's generally what cyber cover covers. There are obviously lots of different nuances within cyber cover for different things. It might be, and we see it quite a lot when people send their policy schedules to us when we quote for them, that it's just included as part of a package. So it might be that you don't really need it or you don't really want it. Speak with your insurer, get them to explain how it might apply to you and why they might need it. And then you can make an informed decision after that.
Perfect. 2 more to go. So the statement of fact attached to our certificate says most of the questions have not been answered. Where do we stand legally?
So the statements of fact have not been answered. Okay, so I'm assuming that you have a policy schedule. It's giving you statements of fact and you've not been asked those questions. If you've not been asked those questions and you don't comply with all of those statements of fact, I would say you need to notify your insurer immediately of that and get them to amend the policy wording, the schedule, and find out actually where that information came from.
Perfect. And then we've got another kind of 4 kind of questions that are just going to come through, but we can maybe send those to you separately afterwards, Steve, and we can include an answer in the follow-up email. But for our last kind of question today, so we are a small charity, and due to the current financial climate, we're looking to move to remote working with so having non-office based staff. We have 1 part-time staff with a volunteer and trustees. Do we still need an insurance cover for our charity work?
Again, I'll come back to the difference between need and want. So need, if those are paid staff, then yes, you still need the employer's liability. If they're volunteers, I mean, they are still working for you. So, I mean, a common claim for working from home or something to consider would be, what is that volunteer's work set up like? Have you considered that they have all the equipment they need? Could that result in a long tail claim for, is their chair correct? Are they going to suffer a back injury because you've not provided equipment? All of these things are still relevant, whether they're working from a central office or from home. So it doesn't completely eliminate any chance for claim just because you're working from home.
Brilliant. Thank you so much. That is the most questions I've ever seen kind of answered quick fire in a webinar in my life. So thank you for answering all those questions for us.
Thanks for your questions.
Brilliant. Yeah, there were heaps there. And thank you everyone for kind of contributing your kind of questions as part of the Q&A. But just to finish up, NCVO's Know How website is where we host an abundance of information, tools and resources that will support you in running your organisations and delivering your services most effectively. So on screen now, with links added to the chat, are 4 resources that I wanted to draw your attention to. So we have NCVO Know How guidance on insurance, which includes charity insurance basics, the types of charity insurance that may be relevant dependent on your organisation's size, complexity and activities. So that has so much of what we've kind of discussed today, but is a great kind of reference point for you, kind of your trustees to kind of come back to. We've also got NCVO's guidance on getting volunteer insurance, and we've had quite a few questions around that today. We've got the Charity Commission's guidance on charities and insurance, which is aimed at trustees to help them decide when and what insurance will be appropriate for their charity. And finally, we've got guidance on charities and risk management, which is another page of advice from the Charity Commission, outlining how trustees can identify, assess and manage risks to their charity. Before we leave today, I also wanted to highlight one more event that NCVO are hosting as part of Small Charity Week 2022. So tomorrow we have a Tested Experts event with colleagues from Digital Candle who will be on hand to answer your most pressing digital questions. And there are still a handful of spaces left for this event, and you can sign up via the link being shared in the chat. So that very nearly brings us to the end of the hour that we have together. Chanel is about to launch a very quick snap poll, which will appear on your screen any second now, to get your initial thoughts on how you found today's webinar. This is completely anonymous and the poll isn't being made public, but we've also got a SurveyMonkey evaluation of 5 or 6 questions, which will only take a few minutes to complete if you have the time, where you'll be able to feedback on the things that you enjoyed, where we can make improvements, and what other areas of insurance or risk that you'd like more information and support on. So all that's left today is to say a huge thank you to Steve for his time and expertise. It's been incredibly useful. And finally, a huge thank you to all of you for joining the webinar this afternoon. We hope to see you all again soon. Have a good day and we'll see you soon.